Market. Let's start with you. Yes, the dollar is easing, but it is not the turning point yet, correct?
I think it's safe to say that there are very few who would dare to move against the dollar momentum at this point. It's a dollar bull market. Everybody knows that. I would rather quite a brave soul to work against it. I mean, haven reasons, higher treasury yields, and you look at euro, look at pound, there's very little to actually move against momentum at this point in time. So yes, I think there's barely anyone in the market right now that will be talking about a peak dollar at this juncture.
And we have Mark Cudmore-Teck saying that for us to get to peak dollar, we have to see capitulation across markets, and no sign of that happening just yet.
Well, Haslinda, I'm not sure whether the stock market is what the Fed cares about. Unless, like you say, a capitulation might matter to the extent that it trickles into the credit market and causes a seizure in the credit space, right? But stock market is clearly not a concern. I think what the Fed is really looking for is a backward-looking indicator, which is very untypical of monetary policy making. It wants to see softer labor market. It wants to see moderation of inflation. Danger, of course, is that all this takes time, and there is a big lag. So unfortunately, like I agree with Marcus, don't stand in front of dollar strength for now.
The thing is, we're seeing extreme strength in the dollar. Some say something will break, and we could be closing in on that. What would be the first to break? EM currencies?
Yeah, so far, EM currencies hasn't broken as badly as some developed currencies like the Japanese yen, the sterling pound. Even the euro is making bigger losses than certain EM currencies. But I think you're right. The EM space is an important next phase of this episode. And if the Chinese yuan were to just go a lot weaker, it could very well drag down the entire EM space. So that is the key area to watch.
The thing is, the yuan, it may seem weaker. We talk about a weakening yuan, but in terms of the basket of currencies, it is quite resilient.
Yes, and I think PBOC is aware of that, and that's why they've done measures to actually slow the depreciation. But the back of their mind, essentially, the yuan has been doing fairly okay vis-a-vis its other peers. Yes.
Question to Teck here. It's Rishaad. Teck, the Fed's almost acting like a wrecking ball. The thing is that what they're doing has repercussions across the world. And, of course, with commodities and other things being priced in dollars, are they exporting inflation? And with that in mind, how bad does it get for these countries which are at the receiving end of all this?
They are certainly exporting inflation. And I think the point that you correctly pointed out is that if you look at the current decline in oil prices, for a country like Japan, for UK, there is no decline in oil or energy prices because the currency is 10-20% weaker. So I think that comes to the point that the central banks need to match the Fed in terms of tightening. Japan is a case in point that if you're unwilling to do that, you might just suffer the consequences of a weaker yen. So yes, they are exporting inflation, and therefore other central banks need to match up to what the Fed is doing.
If the dollar's a haven, who else is?
Well, I would say safe haven currencies would typically be something like the Swiss franc. Even the Sing dollar is a very attractive safe haven to the extent that if you are looking for a currency that protects against inflation, these are the two central banks that uses currency strength to mitigate inflation. So those are the direct beneficiaries of inflation on the rise. Safe haven to yen has been very much already abandoned some time back. So I would say Swiss franc and the Singapore dollar would be your first port of call.
Question to Marcus here. Marcus, right, when you look at what's been happening with the yen and the intervention that we saw last week from the Ministry of Finance, the thing is, it was fairly ineffectual in terms of their actually not changing the fundamentals out there. I mean, the spreads that we're talking about, the BOG are just continuing with this easy monetary policy as well. So it didn't really change anything on the ground. So that's where we are, back where we are, essentially.
Yes, I mean we're kind of not well. We're kind of close to back to where we started. Today, the dollar yen is actually close to the 145 level, and just earlier they just had unscheduled operations again to defend its yield curve control policy. So as much as they like to intervene, as much as they have intervened and are possibly likely to intervene moving forward, unless I guess what a lot of investors are saying, unless they actually walk back or abandon the yield curve control policy, they are in a losing battle against the mighty dollar. Essentially.
Teck, I want to ask you the MLive Pulse question. Where is the next currency crisis? Of course, we've seen that crisis in the pound. In fact, Bank of Singapore calls it the British peso. What would be the currency that you're looking at the most to see whether it is in a state of crisis?
I think the pound gave a pretty big alert to countries that want to toy with fiscal imprudence. So on that measure, I think when we talk about the latest Italian election results, for example, maybe that keeps them from doing something too dramatic. So I think the easiest, weakest link for that matter could be in the emerging markets where currencies haven't moved as much. I would be most worried, for example, of the Philippine peso, which is overheating on the ground, and also the fact that they have a current account deficit as bad as the UK, which is close to 8% of GDP. So that is one other currency that I would be really cautious about in the near term.
How about the Korean won?
Korean won has fallen a lot, but this is interesting because the Bank of Korea has also been very hawkish from a very early point in time. It is at the exposed to the global cyclical slowdown. So I think no matter what you touch on, nothing stands unscathed against the dollar. But the interesting part is that once we get this global turnaround, actually the Korean won is looking really cheap to add some exposure.
In the medium term, I do think we will eventually see probably coordinated FX intervention. There comes a point at which the world and the world's policymakers realize that possibly a weaker dollar, or maybe at least a less volatile dollar, is in the world's and in the US interest. In the short term, I actually think probably the only hope is maybe some sort of self-corrective mechanism.
That was Ibrahim Rabari, Citi Global Head of FX Analysis. We are looking at dollar taking a bit of a break today. Teck Leng Tan is APAC FX and macro strategist from UBS Wealth Management. He's still with us. Teck, what do you make of that comment? I mean, can we get some sort of self-corrective mechanism here?
Yeah, I think the self-correcting mechanism might not work this time around because if you think about in the past where the currency is essentially the valve where weakness will then be followed by more competitiveness. But today's context is different because if you get a weaker Japanese yen, for example, does it mean that more people will go to Japan to spend, or there would be more buying of Japanese products because there are supply chain issues? It is a little bit obstructed because obviously borders are closed until recently. And the fact that they have supply chain issues means that for people that are wanting to buy a Japanese car, for example, the wait list is still 6 to 12 months, right? So the balancing mechanism of currency weakness as a self-balancing instrument is actually obstructed, at least in the near term.
Teck, then let's have a look at what's been going on with the yuan. I mean, traders are girding themselves at the moment for some sort of reaction from the PBOC. They've been waiting for a while now. They seem fairly laissez-faire about all this. Is this just a bit of benign neglect coming from the Chinese?
I wouldn't really say passive, because if you look at the fixing pattern, they have been aggressively fixing the Chinese yuan much stronger than where it is supposed to be. So I think the intention is clear, and they are very serious about slowing down the pace of weakness because of what is happening leading up to the party congress. But it is also the realization that they've been a little bit too late in letting the Chinese yuan weaken, because last year and so far this year, the Japanese yen, euro has weakened much more than the Chinese yuan did. So they are a little bit trying to catch up to the weakness of other currencies, but it is still very, very managed.
But the thing is, when it comes to the yuan, I mean, an easing monetary policy is the right policy for the Chinese economy, which has been shocked to the rest of the world, which is slowing. It is the right policy. So as much as we talk about divergence in monetary policy that's causing the weakness in the yuan, it is adopting the right policy.
I think that is precisely the difference between China and the UK. Now, both governments are easing fiscally, monetary in China. That's the right thing to do. But the difference is that the Chinese rate is not as badly affected because China runs a positive current account surplus, right? So they are self-financing. So if they ease policy to support domestic growth, the currency is not that much affected. Yes, it is diverging from the Fed, which is why dollar CNY will still grind higher, but they have the means to do that.
King dollar, extreme moves. Is it enough where we are right now to be at a tipping point where we'll see an economic or financial crisis?
I think we are indeed close to that point. If the Fed continues to follow backward-looking indicators to make forward-looking monetary policy. Now, but before that happens, I would expect a couple of things to materialize. Firstly, there would be a lot of swap lines that would be first established for the Fed to not pull back on the hawkishness because it can't, but because it is simply recognizing that other countries are in trouble, and if they don't step in, there might be consequences down the road. So I would think that even before we get to the tipping point, you will see a lot of central banks announcing swap lines with the Fed.